Hello everyone, I am Willie and welcome to our four-part series of interest rate, inflation, and the economy. Now you're watching the part 1 whereby we're going to look at interest rates. Does it destroy? So stay back and let's find out. Before we dive in deeper into the topic itself, we need to find out what actually is interest rate. We need to know who control the interest rate, and we need to know how we actually control the interest rates and what it could lead to. So first of all, we're going to look at what actually is an interest rate. Interest rates are normally a rate which is actually denominated in percentage term. There's different kinds of names for interest rates, such as borrowing rate, overnight rate, or lending rate, depending on which country that you are in. Now, interest rate actually greatly influences the economy. It can bring major shift in terms of the economic spending, as well as its overall employment industry and others. For interest rate itself, it is actually being used into two main factors. Interest rate will be used to determine either the savings or the loan. But how do we actually use interest rate to determine this? It is actually used as a benchmark. So a bank or a commercial bank will actually take interest rates that is being set by the central bank and place an own benchmark on them in order to determine what is the savings rate and what is the loan rate. Now, in terms of savings, it is actually used to determine the interest that is being given when you save or deposit into that commercial bank. The rate will normally be quoted per annum or 12 months. Similar goes to loan. The interest rate will be used as a benchmark to determine the interest that will be charged for loans. On top of that, we also have premium and risk premium and such like that, but we're not going to talk about that any further in this video. And same as savings, the rate will be quoted per annum as well. So the interest rate itself is actually set by the central bank. A central bank is actually a centralized bank for that country itself, whereby it actually controls all other commercial banks. We will talk about this later on. And it is being used as benchmarks by commercial banks, which I've explained earlier. However, interest rate setting actually requires a lot of determination. We need to see how well the economy is going to perform after interest rate setting, as well as the impact that it's going to bring to our lives and also the economy and also the whole world, maybe, if the central bank is very influential. So now let's move on to the next part. Now, in the recent months or recent years, I guess most of us has always heard of the central bank. But who are they? What do they do? And what are they like? Now, essentially, central bank is the forefront of monetary policies. Monetary policies are policies that is being introduced that has relation to money or the currency itself. They actually act independently from the government. So this means that no other parties could actually influence what the central bank should announce or do. They act independently according to economic scenario that the country is actually experiencing right now. They also govern all other commercial banks. This means that we could say central bank is actually the big boss of all other smaller banks in the country itself. There are several examples of central banks around the world. We have Federal Reserve from the US, Bank of Japan from Japan, and Bank of England from UK. Now, there are tools that is being used by the central bank to actually tweak how the economy runs in terms of monetary policy. Now, the three main tools that they would use are known as reserve ratio, quantitative easing, or better known as QE, and even interest rates. The central bank job is to make sure that the economy is actually running smoothly or running well. They also control all other aspects, such as how commercial banks should run, what are the policies, and the scrutinization towards commercial bank in order to prevent fraud. But the main concern for the central bank is to make sure that the economy is stable. Since now we know that the central bank actually controls the interest rates and they set it according to the economic condition of the country itself, but how does an interest rate actually influences the economy? Now, interest rate actually influences three main factors of the economy. Number one is employment. Employment in the sense whereby how well the employment market is working right now. This is in terms of are there a lot of unemployment or a lot of people got their jobs and so on. Second factor would be businesses. It will actually affect how businesses could run in terms of their activity and their production rate. Number three is consumers. It could affect consumers in terms of how much money does the consumer spends, or is there a lot of consumers actually saves their money rather than spending. All this is being factored by interest rates itself. So interest rate actually plays an important role in our daily life, and it is not something to be messed with. Now, I guess everyone got a head start on what actually is interest rates, how it can actually affect the economy, and who actually set interest rate itself. This is the end of part 1 of a 4-part series with regards to inflation, interest rates, and the economy. Do subscribe to ZFX on YouTube and stay tuned for part 2.